Hi, everyone, and welcome to the Buffett and Beyond ETF report for April 20th, 2024. And folks, we're going over the NASDAQ 100 top 12 stocks. And in this past decline of the past couple of weeks, we are looking at hedging, and hedging is working just fine, folks. And let us look at the XLK, which is the Technology Select Sector Spider Fund, and this was last week, and we were hit hanging out on the 50-day moving average here. And of course the main indicator was pointing down. Now let's go to this week, and we can see it broke down. This is the technology ETF again. Broke down through that 50-day moving average and coming down toward the 200-day moving average. And you can see down here that indicator is getting way oversold now. So we should be getting a bottom in here pretty soon, folks. And when we look at the Dow came down and it hit its 100-day moving average. We put that line in there. We wanted to see where it stopped. Again, it was getting into oversold territory down here. And when we look at this week, because that was last week, this week, it wants to hold on to that 50-day or that 100-day moving average. This is the 50-day moving average up here. And folks, we're getting a little uptick as I'm recording this, but it hasn't closed yet. And I'm recording this on Friday about 1 o'clock, 2 o'clock, somewhere in there as we go along. And maybe it just wants to turn up in here. So folks, that might be the harbinger of things to come, or it might be the good thing of things to come, because the Dow is starting to hold on in here while everything else is just going down. Now let's look at the QQQs. This was last week, and again we have this indicator up here just going down, and we're going to see how our hedges work. And we were hanging on to that 50-day moving average. Let's go to this week, or this past Friday, and we are looking at it. Broke through that 50-day moving average, broke through the 100-day moving average. Very, very much oversold in here, and it could get a little bit more oversold. But we have to wait until next week to see what's going to happen. Now, let's combine what we did last week and what we did this week. So we are looking at the 11th, which was last Thursday, and we are looking at the 18th, which is Friday afternoon. So let's see what we were doing last week. And these are the top 12 stocks that we have in the QQQ. So we use our clean surplus methodology of stock selection. And our whole theory is that if you're in an index, the index is going to contain better than average stocks, and it's going to contain below average stocks. So the key is to pick out the better than average stocks. And in this case, we had more than 12, but we picked the top 12, and we want to see if we can outperform the index. Now, all our research, 22 years after the research of actual portfolio implementation, shows that we can do this, and we have been doing it on the S&P 500. Almost 3-to-1 on a compounded basis have been outperforming the S&P 500. And folks, the Morningstar report came out a long time ago that said over any 10-year period, 96% of professional money managers cannot outperform the S&P 500 over that any 10-year rolling period. So if you can outperform the S&P 500, you're in a top 4% bracket, folks. And guess what? It's not the same 4% every 10 years. So here we go. And we picked the top 12 stocks out of the NASDAQ 100. Now, the NASDAQ was up 8.8%. I'm sorry, the QQQs were up 8.8%, the NASDAQ 100. The S&P was up 9%, so we're right about even there. What did our top 12 stocks do? Up 20.8%. Now, what if we were 30% hedge? We're only looking at the 30% hedging in here, and we're using the SQQQs, that's the inverse 3-to-1 of the QQQs. So we're short the XQQs 3-to-1 by using this SQQQ. And don't forget, this was designed for IRAs because you can't short in an IRA. So this is why this was invented. It was up 13.3%. So in other words, as of last week for the year, the QQQs, NASDAQ 100 up 8.8%. Our top stocks were doubling that, 2.5 times that at 20.8. And if you were hedged, you were up 13.3%. Now, 13.3%, even though you're 30% hedged, is still more than both the QQQs and the S&P 500. Let's go to this week. So this is as of Thursday, the closing. And folks, we're looking at, we dropped down, we're up 13.9%, almost 3 times that of the S&P 500, 4.5 times that of the QQQs themselves. Again, the QQQs are the NASDAQ 100, and out of the NASDAQ 100, we picked 12 stocks of the top stocks, and too bad Tesla's in there, because that's just kind of ruining our day, isn't it? But not that bad. Anyway, if we're 30% hedged, we're still up 10.3% as of the Thursday's close, which is doubling the S&P 500 and tripling the QQQs themselves. So even though we're hedging, as long as we pick these top stocks, and we're really good at that. Now, let's look at something here at this chart down here, or this part of the chart. If the top stocks, 20.8%, drop down to 13.9%, that's a 7 percentage point drop from 20.8 down to 13.9. So it's a 7-point drop. But what percentage is that 7-point drop from where we started? That's 33%. So 7 over, say, 21, 33%. It's a third. What if we were hedged? We went down from 13.3% down to 10.3%. That's 3 percentage points, but 3 percentage points based on this percent is down 22%. So there's a difference between percent and percentage points. So you have to make that understanding in here. Well, 30% hedged, we're down 22%, or actually 3 percentage points. 13.3 down to 10.3. Now, what if you were just in the QQQs? You went from 8.8% up for the year since December 31st, up 8.8% as of last week, down to up 3.4% this week. So that's 5 percentage points, 5.4 percentage points, or a drop of 61%. What if you're in the S&P? You went from 9% down to 5.1%. It's a drop of 43%. So let us look at this chart alone, this part of the chart alone. It's a little bigger. If you're 30% hedged, you're down 22%. You're still up for the year. You're up 10.3% for the year, but we dropped in this past week 22%, but 3 percentage points. Let's go back to that. So we went from 13.3 down to 10.3 if we were 30% hedged. Now the S&P dropped 43%. It went from 9, got cut in half, folks, down from 9 down to 5.1. Not exactly cut in half, but down 43%. Big drop. So wouldn't you rather be down like half as much as the S&P 500 and still doubling the S&P 500? You're still doubling the S&P 500 and 4.5% better than the QQQs themselves while you're hedged. Now, what do we expect to do with that hedge coming next week? We expect to cash it in and buy more of our stocks. Now, these stocks are worth about $5,600 if you total all of them up, the 12 stocks up, and $5,600, maybe $5,000 if it goes down a little bit more. So you take whatever money you have and you buy 1 share of each of these stocks or something of the sort. You want to kind of keep as much the same amount of money into each stock as you can. So you want it equally weighted as much as possible. But that's what you do with the hedged money. So being hedged, folks, you're down only 3 percentage points from 13.3 down to 10.3. If you're just long those stocks, our top stocks, you're down 7 points from 20.8 down to 13.9. So when you look at these numbers, folks, you're saying, hey, this isn't too bad. If you don't mind the risk, you don't even have to be hedged. If you want to be hedged, I mean, in case we get a fall like 2022, you really kind of want to be hedged in there. And then these hedges are worth money when you get to a serious market bottom, and you cash them in when near or at the, if you can catch that bottom exactly, that'd be nice. But if you're near the bottom, you cash those hedges in and you turn around and you buy more stocks. And that's how you add money to your top stocks, folks. And that's how you increase the value of your portfolio when it goes back up again. So again, 30% hedge comes out the winner. Top stocks come out a winner, much better than just buying the NASDAQ 100 or the S&P 500. So the top stocks, whether you're hedged or not, come out. And if you're 30% hedged, you come out on top. So folks, we had another terrible week this week with the market going down almost every day. Well, I think it did go down every day. So you go out, you clear your head, and folks, you have a good weekend. Stay safe, be with your family, be with your loved ones, and guess what? The market will be here in living color back on Monday. So folks, good weekend, stay safe. We'll see you next time.